All right, hello everyone. Welcome to Portfolio Building on Fridays with Terence. This is live over on our Facebook group, and welcome once again. If you are joining us, drop a note, say hi, so I know you can hear me very clearly. And do remember, at the bottom of the screen, if you're joining us for the first time, right, you will see a streamyard.com/Facebook link, all right, or facebook.com/streamyard, something like that. Okay, click on it, right, and then approve it. So I will be able to see who is leaving comments on my back end over here, okay? All right, now, thank you very much. Now, so again, if you're joining us for another week, if you have been liking the ideas and the contents we've been sharing, please click on the like button as we begin. Okay, I'm going to be sharing about the markets, the new outlook, some potential trades that I'll add today. If you do have friends who are trading the American markets or looking to start investing, right, share this video out with them as well. There's a share button on the Facebook post, right? Click the share button, leave a comment, right? Some stock market insights or, some sharing, okay, so they know what it's about. And thank you very much in advance, yeah? All right, thank you. Okay, so let's get going. I stay committed to trying to run this session for all of you every Friday, so I hope I'll get some love in return. All right, now, so let's get going. We are back to our normal session, and today let's get going first with the markets, okay? Now, hang on. Okay, so I'm going to share with all of you my market outlooks, what I expect from the markets. All right, hi City Chai, hi Adelaide, hi Nelson. All right, hi Sui Heng. All right, hi Sing Cho, hi Roger. Okay, and Dong Kiao, Wee Leong as well. Now, thank you very much for joining us. And always, as usual, the all-present Facebook user. So this is how you look like if you don't click on the link, yeah? All right, so please click on the link with the live stream post. All right, approve it after that, and I'll be able to see your profile and your name leaving comments, yeah? Hey, Hernando. All right, so market outlook, nothing has changed. Okay, now I say nothing has changed because we're just bouncing within this channel right now. Okay, market has been very quiet. We hit the bottom, we bounced off, right? Not much has changed, but I do believe we may see a weaker close today. All right, let's see. Okay, but I do believe market may come off today. Now, while it is slated to come back and challenge this high, okay, but we may very well see, okay, this, okay, form another resistance point, right? But let's see what happens today, right? 4176 may be another resistance point, but let's see how the market plays out. But if that's the case, I actually do see more downside in the market. Yeah, okay, the sell-off over here has changed quite a bit of things. And with the divergence that's coming about, all right, it is still playing out, right? Our MACDs are still heading lower. Nothing has changed. If the MACD crosses over to the negative zone, right, that would actually lead to more selling and more intensity. Okay, now, so the volatility index has also been kept high. Yeah, okay, so that's another reason to expect more volatility in the market. My screen is blurred, but unfortunately, that's what I can do. Let me attempt at risking breaking down the platform again. Okay, Herbert, this is the best I can do, okay? All right, hopefully it's good enough. All right, now, so, yes, so 4220 to 4080, that's the bigger zone, right? The smaller zone will be 4080 and 4180. Okay, if it comes back down, it breaks 4080, it can go all the way down to 4,000 levels. Okay, all right, or even 3980. Okay, amazing how it's always the 8080s, right, that's appearing right now. Okay, but we shall see the negative divergence have not played out yet, so we can see more selling, yeah? Hi, Josephine, welcome to the session. Now, so that's what I'm expecting, and my stance stays the same, right? I will still be loading my portfolio for cash flow, okay, but at the same time, okay, I will be picking or making very, very careful choices with my stocks, okay, because there are always bargains in the market, right? Regardless of market condition, Whether it's cheap, whether it's expensive, there will always be great stocks trading at a bargain, all right, at a great valuation. Right? The only difference is this, right? When the markets have already corrected, when the markets have already crashed, right, there will be more of them available. It is much easier to actually find them. Okay, but with markets that are what we have right now, okay, the only thing that has changed is just trying to find them, right? It's just a more cumbersome or a little bit more difficulty. That's all. Yeah, but they are there, right? That's all I can say. They are there. Right now, so the benefit of my members over here, okay, or my community, anyone who goes through our mentorship, is that they are always given a basket of stocks, right? So rather than scan through 9,000 stocks, right, they are literally scanning through only about 100 to 150 stocks every week, right? Now, so they will be able to find some bargains, right, within those stocks with the basket, right? In fact, today I'll be placing a trade on one stock that is inside my portfolio basket itself. Right? Many of my students will realize I literally go around these 20, 30 stocks that I'm always looking at, all right? And somehow, there will be one of these companies that are always trading at a bargain, somehow. Yeah, okay? Now, so imagine if you're within one of our communities, all right, how much simpler it is going to be for you to find these trades. Now, if you are not already with us, right, do send my team an email, find out how you can join one of our available programs and mentorships out there. Yeah, okay, and whatever tickles your fancy, right? Be an option seller, join us, right? Whichever route you take, right? Let's go create some profits together, okay? Now, but for now, today, once again, I was stressed before I start, right? A standard disclaimer, all trading. All right, so disclaimer is out. Please do your own risk analysis, all right, and do your own conditioning, all right, and make your own judgment. If you need to speak to a professional before you place any of these live trades on your own accounts, okay? Now, I'm doing this for a more educational purpose, from an education angle, right? Sharing with everyone who's joining us, okay, how you can actually build a simple selling options portfolio, right? And generate cash flows, generate income, right? On a consistent basis with a target, right? With a target of hitting 20% per annum, right, on a portfolio that we actually built, right? So I'm trying to do this live every week with everyone, right? So let's see what happens, all right, at the end of the day. Yeah. Okay. Now, so this portfolio that I'll be showing all of you, okay, which you are seeing right now as I swap the screen around, right? It is a model portfolio that is built around $100,000 capital, right? $100,000 capital, right? So we started way back in July, okay, and right now, okay, we are in April. So we have done this for a while right now. Okay, we're sitting at about 14.5% to be exact, right? We have generated about 14,500 in cash flow. So with about April, May, June, July, we are in May, right? So June, July, we have about 2 more months to go, right? We have about 2 more months to go, right? I'm a little bit under, but 14.5%, right? It's a pretty decent return, right? It's pretty decent return after an amazing last year that we have. Right, and we are only trading very passively, right? In fact, I'm only going on with you once every week. I'm placing 1 or 2 new trades on my portfolio every week. Yeah, okay, and with that kind of workload, we're still able to make 14.5% return, right, on a substantially amounted capital portfolio, right? And it's pretty amazing. It's pretty amazing. I have been running this strategy, right? This particular kind of option selling from a very basic angle for more than 10 years now. Right, and only did I find out, right, that whatever I was doing was called the option wheel strategy. Oh my goodness, right? Okay, now, so I see these comments going around, what's option wheel? In fact, it stumped me. Yeah, okay, but I realize it's exactly what I'm doing, because what I'm doing over here is selling put options on stocks I'm willing to own, right? So if anything happens, I own the stock, right? And I will also attempt to sell call options after that to generate cash flow, right? Until somebody takes my stock away from me. Okay, but I add on an extra step. If I can close the trade profitably, I will close the trade and then restart the wheel. All right, so since we call it a wheel, let's continue doing it a wheel. Yeah, all right, so we restart the wheel. I'm always trying to stay in the wheel at the front end, which is selling on the put options. Okay, now the benefit of this is actually very simple. All right, first, you need stocks that are not choppy. You will need stocks that are very well behaved. Because if you pick a very volatile stock that swings up and down rigorously, yeah, okay, with an option wheel strategy or what we're doing over here, it will not work. And it will actually end you up with severe losses as well. All right. So no, Tesla is not a great stock for this strategy. And in fact, I'm not getting anywhere near Tesla. Yeah. Okay. I'm not getting anywhere near that. Okay. Now I know there are a lot of growth stock investors who swear by Tesla, but I'm not one of them. Okay. I'm definitely not one of them. And I won't put a strong word, okay, but it is actually very logical, right? It's actually very logical from a standpoint, okay, for a particular fund manager, right, who manages a growth fund, right, okay, to be heavily invested in companies like Tesla, all right? And what do you want them to do, right? If they have a substantial holding of this particular stock in their portfolio, all right, even if the going is tough right now, they have to put on a tough front, right? Because they don't want people smelling fear on their end. Because if people smell fear on their end and they start selling, they're in no better position. They have a huge load of the stock, all right? And they need to find a way to unwind if they even think so. I'm not saying they do, but if they're thinking of unwinding the exposure, they need to unwind, right, before the fear sets in. Because if people sells off, all right, they had billions of these shares, they are stuck. They are stuck, right? So no way are they going to say, right, that they have revised or changed their outlook until they have downsized themselves, right, to perhaps something they're more comfortable with. Yeah, all right, okay, now, but there are always threats, okay, because if you look at Tesla, Tesla doesn't look nice at all, right? You can have all the vindications you want, you can say whatever you want, right? But Tesla definitely does not look nice at all. Yeah, okay, we've been saying this forever now, right, and it still doesn't look good. Okay, it has hit the high, and ever since it's hit the top over here, right, it's just been heading down. Okay, now, so if it does bounce back up, all right, you expect it to hit about 670 resistance level, right, and then come back off again, right? That's pretty much the play, right? You may see a rebound, right, because that's a support level where it is right now. Oops. Right, so this is the support level over here, right? But we're nowhere near anywhere around the end over here. Okay, I definitely have my qualms with it because, right, it is a company trading at 500 PE, right? And before it became 500 PE, it was trading at 1,000 PE, right? So at 1,000 PE, people were telling me, all right, do not value the company based on PE ratio. Yep, that's okay, no problem, right? But at 500 PE, I'm still telling you it's very expensive, right? Because I'm not being judgmental at all. Right? Because everything has to be supported by fundamentals, right? Sooner or later, right? Sooner or later. And the fundamentals, right, for this company just doesn't check out, right? You have a stock that goes from $300 to $900. So that's 3 times, right? 3 times. But at the same time, the earnings, all right, the earnings are not matching up, right? It made $2, right, per share about a year ago. And right now, okay, let's compare quarter to quarter. Right, it made about $2.14, right, for the January quarter last year. All right, okay, but it's made only 80 cents per share, right, in the January quarter this year. Yeah, true, they have their stock splits and stuff like that. But can you imagine if a stock split came at the expense of the earnings per share of the company? That doesn't sound like a good decision, right? So many people bank on the fact that when stock split, right, the price usually reverts back to the norm. Right, it reverts back to the norm. Yeah, okay, but for that to happen, right, the earnings per share has to show continued growth. So with more shares floated, right, if the earnings per share is still a higher number, that means the company has made more money, right, and that justifies, right, the higher valuations of the company. Yeah, you see where I'm driving at, right? But now, if you increase the share float, right, but you show a lower number for earnings per share, right, then it's really of no benefit to investors. Yeah, it's of no benefit to investors, right? For a growth stock to keep growing, earnings have to keep growing. Yeah, okay, but in this case, it is not showing so. Yeah, it's not showing so, right? And for Tesla right now, okay, they're pretty much, okay, they have not actually gone to the maximum capacity they have, right? But they have gone to a stage right now where they have attracted a lot of interest from competitors. Right, competitors not from new EV companies, but competitors also from traditional car manufacturers, right, who are coming up with their EV models. Right, we have seen it happen with the Porsche, the Porsche, right? We've seen it happen with Ford right now as well, right? With coming out or launching their Mustang E versions, right? I don't know when it's going to hit the market, for real. But when these things do hit the market, right, they will attract some of their stronger followers, right? And all I'm saying is this, right, that they will face competition, right? So trying to increase and grow their market share amidst intense competition, right, is just going to make it more difficult for them, right? If already it's not difficult, right? And there seems to be a problem with one of their biggest market, which is China right now as well. Yeah, okay, all right. Now, so with that, I just, enough, right? If I continue, people will just say I'm bashing it. All right, stop. I'm stopping. All right, I'm stopping. Yeah, okay. But if you do find, whatever I share with you useful, right, the only way you can help me out, right, is to click the share button. Because if you do have friends owning Tesla, right, they may really need a different objective, right? They may need a different objective. Yeah, okay. All right. So it'll be great if you can help me share out the video. All right. And then though, right, only for a drive. Yes, I definitely would agree with that, right? Not liking the company as an investment, right, doesn't mean I won't buy a Tesla one day. Okay, so let me put that up front, right? Just like I will not trade Nike right now because the valuations are just crazy. But it doesn't mean, all right, that I'm not going to go out there and buy another pair of Nike shoes. You see what I'm trying to say? Yeah, right? It's a different objective altogether. Yeah, because when it comes to investment, right, everything should have an investment purpose behind it. If there's no investment value, you should not be getting in, right? Because otherwise, you're just putting odds against you, right? And it's really difficult in the stock market. So don't increase the odds and make things difficult for you, right? So Tesla, if you got in at 300, great. But now is not the time to add on to it. Yeah, right? Now is definitely not the time to add on to it, right? Just like, I have no vested interest, but just like Bitcoin, right? When it hit 60,000 or when it hit over 50,000, right, 50,000. That's not the time to get in on it, right? Because if you get in on it a few days ago, right, you would be in a very difficult situation. Are you going to liquidate or not? You see the problem? Yeah, right now. So trying to chase these high prices, right, has to come with a lot of validation, right? Then right now you have to ask the question, is the validation still valid, right? Because once it stops being valid, right, and you have to constantly be on top of things, right, you need to take action. Right? Because if you don't take action, something could go wrong. Yeah? Okay? All right? So be very aware, okay? All right, now, so I hope it's useful. I don't know, all right? If you believe that I'm just trashing it, all right, feel free to type trash in the comment. But if you do find that whatever I just shared on my analysis on Tesla is useful, right, you can type useful and let me know as well. Yeah? All right? Okay, it'd be great, okay, to know what's applicable, what's not. So I keep out things that are not interesting to you, all right? I try to add things that are more interesting to what you want to know. Okay, let me know, yeah? All right, thank you very much, Channel. Okay, now in the meantime, while waiting for you to make your comments and your posts, all right, I'm just going to go to a portfolio management. All right, I'm always trying to keep this to a half an hour, but I never get to do so. All right, now. So you guys have typed useful, all right, now. So I'm going to do something later. I'm going to go to the Facebook itself later and check if you guys shared for me. Catch 22. I caught you. All right, so if you find it useful, all right, help me share this video, okay? Leave a comment and help me share this video. Yeah, okay, because you found it useful. It'll be great to share useful information, right? So that's what social media is meant to do. All right, so do help me, okay? Do help me out. I caught you. All right, now. So let's go to CAH. CAH expires tonight, actually. All right, so let's have a look at that trade. All right, and let's look at what I should do with that trade. CAH. All right, here we go. All right, today I've got the benefit of the move. Okay, so CAH is at 57.85. Okay, so I have two choices right now. I can leave it until the market close and risk, all right, and risk being assigned the stock, because if it falls below 57.50, I will have to buy the stock. Alternatively, all right, I could just pay the premiums right now, okay, and get this trade close. Okay, I could pay the premiums right now and get this trade close. So let's have a look. Let's see what we've got. It's really slow. Right, TD Ameritrade seems to slow down right now. Okay, but let's have a look. Let's wait. All right, thank you very much, Herbert. Thank you very much, Fred. And always, thank you very much, Uncle Fu, yeah? All right, I've been notified. You guys shared the video. Okay, 57.50. It seems like I could still close this for 5 cents, yeah? Right now, so place an order to close this trade now, 57.50 puts for 5 cents, okay, or pay up to 10 cents to get it closed. Okay, now why am I willing to do so? One, very simple, right? I collected 145 for this. Okay, I collected 145 for this, right? So even paying 10 cents to close this trade, right, it would still be very profitable. Yeah, okay, now, so to be very clear, all right, I'll just pay the market price. I'll put it at 10 cents, all right, we'll close it. So I would have made $405 over here, okay, from from 9 April to today. So that's slightly over 6 weeks, I think, right? This was a 6 week trade. Okay, so I officially locked down $405. We got it closed today on the 21st of May, right? We're done. So this liquidates the need for this investment. Now, so please understand, I am selling only portfolio puts, and portfolio puts simply means, all right, whatever I sell, okay, whatever I sell, I will be, all right, I will be putting up the full cash requirement to buying the stocks. So if I sold 3 put options on CAH for 57.50 strike, I will allocate 300 shares of $57.50. Okay, they will be my deposit requirements. Yeah, okay, now, so this trade is closed officially. All right, it's profitable and yet another profitable trade. Now, all these trades that I've done on Fridays are all executed via live market conditions and scenarios. Yeah, okay. Oh man, that was the wrong one. Oh, wrong color. This one, yes. Live market conditions and scenarios, right? So we have fired off 51 live trades so far. Okay, and barring the portfolio hedge, oh yes, all my other stocks have closed profitably. All right, so I have 1, 2, 3, 4 plus the hedge, 5 positions. 5 positions that are still open right now. Okay, with all the closed trades profitable, everyone, profitable. Yeah, okay, all right now. So that's how great when you work a simple strategy. All I've done is the wheel, right? Now people call it, people educated me, it's called the wheel. Right now, but it's just selling portfolio puts and then covered calls, right? Round and round. That's it, round and round. Okay, and we had 45 winners. Okay, in the last 8, 9, 10 months, right? 45 winners. Yeah. Okay, no stress, no sweat. Okay, now so I'm closing that with the rest. Okay, they are all still far away. All right, so I'm not managing them or not even needing to look at them today. Yeah. Okay, so no look at all these positions. Not needed, not required. Okay, not needed, not required. Okay, and in fact, let me have a look. All right, I'm just doing a quick check. Okay, if I want to re-enter to, yes, I would. All right, I'm going to re-enter as well. All right, I'm going to re-enter Cardinal Health for the same strike. Okay, for the same strike, I'm going to re-enter Cardinal Health. Okay, and I'm going to. Okay, but before Cardinal Health, let me go to the trade I planned first, okay? So I don't break my momentum. Now, so I'm going to add a stock to my portfolio today. And the stock I'm going to add to my portfolio today, ready or not, everyone? Voila! Okay, it's actually Verizon Wireless. Oh my God, another boring company. Yes, it is another boring company. But it pays me. It gives me cash flow. I'm happy with that. Yeah. Okay. Now, so I'm going to trade Verizon Wireless over here today. And why? Very simply, I do expect it to bounce off this support level, which it has done so, right? And I expect this support level to hold, right? And if it does bounce, right, it will continue to head higher. All right. Second, right? If the market do correct, right, telecommunication companies are what we call defensive companies, right? So defensive companies will usually hold strong, right, in a sell-off. Or in fact, even bounce, right? If people are not too afraid. That means if we do not have a liquidate all event, right? Telecommunication stocks are what we call the safe havens. So the risky money will move to these stocks, right? To park that money until the conditions are safe for them to move it back again. Yeah, okay, so that's how the mechanics work in the market. Now, so for that, I actually feel very comfortable. And for number two, right? This is a dividend paying company, right? Number 3, right? Valuations of the company are low, right? The PE ratio is only at 12 PE, right? So at a 12 PE, right, it's still a very low valuation. Now, so some of you will ask, Terence, what's a fair valuation, right? You can go out there and do a search, right? But people have always said S&P, all right? S&P, the middle line, the line in the sand is 15. The PE is 15, right? Which means anything above 15 starts to get expensive. Yeah, okay, it doesn't mean you'll collapse, but it just starts to get expensive. Anything less than 15 is considered cheap. So the lower it goes, the cheaper it gets. So right now we have a market that's very high. Okay, I have a stock that's hitting the support level. I have a stock that's trading at a low PE valuation, and also a company that is in a defensive sector, plus it pays dividends. All right, see my argument right now? Yeah, okay, I'm teaching all of you something over here, okay, just for turning up every Friday. Okay, just for turning up every Friday. I'm constantly teaching all of you little things every single week. All right, so if you grab all of them, all right, you would have been a better investor already. Now, so I'm going to sell this over here and let's go. In fact, the dividend is not shammy as well, right? Even if you buy the stock right now at this price, it's still paying you a 4% dividend. Okay, now, another reason why I'm trading Verizon Wireless is actually what happened to AT&T. All right, AT&T spun, right? They spun out and they really spun out in their stock price as well. All right, so I don't like AT&T because some of the fundamental valuations may change, right? They may have to cut their dividends, right? So I don't like that risk exposure right now. So for that, I'm not touching it or getting anywhere near it, right? It may seem cheap, but it may get cheaper, right? Because if it does cut the dividend, right, it will lead to an exodus of some income investors, right? That means we will see even cheaper prices. Yeah, okay, so I'm not about to jump in right now. In fact, I'm trying to take advantage of their next biggest competitor, which is Verizon. Okay, now, so I'm going to sell the 16th of July. Okay, I'm going to sell the 16th of July, 57.50 puts. All right, 57.50 puts. I do expect this stock to rebound, right? So I'm selling the 57.50 puts, right? It is only right now in the money by about 60 cents, right? In the money by about 60 cents. That means I'm getting paid about $1. No, is it $1? Yeah, $1.45, right, in time value. Yeah, and that's pretty decent time value over here, right? So I'm going to take out 3 option positions, right? 3 option positions over here on this stock, which is my typical trade size. Okay, I'm going to do this at 203. All right, I'm not going to haggle. I just want to get it done. All right, 16th of July, 57.50 puts. Oh my goodness, I was too late. All right, now, so I'm 203 over here. I'm at the ask. All right, so if it gets done, I'll be the first one. Some of you probably jumped my gun. All right, you took the 202. You took my prices out. Yeah, I got my 203. Nanny boo boo. I did get my 203. So I filled. Right now, this time matches the platform clock, right? 2214, 2214, right? Verizon, July 16th, right? 57.50 put. I sold 3 of them for 203, all right? So this is done. This is a trade, all right? It was filled. Okay, now, so I'm going to log it down into my portfolio, all right? And then we'll go back to Cardinal Health, okay? All right, let's work out the math for this. All right, this is our 50-second trade. Okay, Verizon Wireless, 16th of July. That's the same date. All right, I'm going after the 57.50. All right, I'm doing this on the 21st of May. Oh, it's just 1 week after my birthday. I just realized that. Oh my goodness. I got 203. Yes. Now, so I'm going to collect $609 in cash flow, right, on the trade. Okay, and my deposit requirement will be $17,250. Right, so that's how much I'm allocating, right, to doing this trade. I'm setting aside $17,000, right, to pick up 300 shares of Verizon Wireless on the 16th of July if I'm made to do so. Okay, if I'm made to do so. So once I have the shares, I can start thinking about selling call options. All right, and this is a very well-behaved stock. It's a boring stock, right? So prices aren't going to run, you know, all over the place. So I can sell my call options, collect premium until I turn it into a profit, right? So this is one of those great stocks over here. I'm more than 100 of them. All right, so join our community, join our, membership over here if you want to find out what stocks do I have on my basket. Yeah. Now, so 50. Okay, let me see if that's a banner, right? Because if it is a banner, it's not a banner, right? Let me change it. Yes, I will change it. Okay, so now it's at the bottom. So for those of you who are new, you're joining us as a public over here. If you want to find out more about our available mentorship programs, or you're interested in our most recent one, the 24-hour earnings explosion, you'd like to be part of the next earnings season that happens in July, right? You can register your interest right now because we're going to take only limited slots, right? We're going to have a special session about it, right? Sharing with you more about the strategy, right? What kind of profits we can make and how you can jump in and register for it as well. Right, so you like to be in the know, you like to be notified before we run the event, okay, just send my team an email, right, and they will be more than happy, okay, to give you the information, yeah? All right, and yes, of course, we do have a spammer. We can't run away from them these days, yeah? All right, we can't. Okay, give me a minute. All right, thank you very much. Okay, now, so I'm just removing the comments, right? I can't fight them, right? So if another one comes, then so be it, yeah? All right, now, so that's 52. Let me go back to Cardinal Health. Cardinal Health. All right, let's add another one. This is not a new trade, but it's more like an add back, but it's a new premium, right? It's a new cash collection as well. All right, let's go. So I'm going after the July as well. All right, so I'm going to go back after the 57.50 puts. So this $2 and more in time value, right? Absolute time value, because the stock is above right now. So I should be able to collect. I'm going to attempt this one. I'm not going to rush. Okay, I'm going to aim for it and I'm going to get it. All right, so I'm going to place this order only at $2.30. Okay, nothing more, nothing less. Okay, so I'm not going to adjust it. If it gets bitten and it gets done, great. If it doesn't, all right, I will come back next week. We'll have a look again. All right, so that's my stance when I place this order. Okay, so I'm going to go ahead and churn the order. I will show all of you that have submitted it as well. Okay, and then we'll go ahead. 57.50 puts, 230. Well, who knows? They may bite their price. And like I said, I do expect the market to turn lower. All right, so this stock may come off. All right, and hey, naughty, I haven't submitted. And you see those 225s, you see those 230s. All right, naughty. Naughty. Don't worry, I'm just joking. All good, yeah, all good. All good. I placed my orders. All right, so I'm in after some of you, of course. All right, so the order is not filled yet, so I'm not done. Okay, I'm not done, but the order is already sent. So I placed my order at 230, joining alongside some of you who have done so. But please let me warn all of you again. Let me remind you again. Right, I'm doing this from an educational angle. Yes, I am placing them on my own account. But before you choose to do so, be aware of all the risk. Right, be comfortable with it. Be in the know. Right, know that anything that goes wrong, what can happen. All right, so standard disclaimers. Okay, yeah. All right, now. So that's it. My orders are placed. We will come back next week and I'll update all of you if the trade was open. Okay, in fact, I'll just leave a post in one of the live videos later on, okay, if the trade was a failed trade, yeah? Okay, now, so these are the two portfolio actions that I'll be taking. Oh, yes, I forgot to do something. All right, let's go and calculate our returns on the Verizon trade. All right, so the Verizon trade, I'm getting paid $2 on an investment of $57.50 per share. So this pays me 3.53% for an 8 weeks option. So this is about 8 weeks, right? So I'll divide it by 8 and then annualize it. Okay, so this trade brings in 22.95%, right? 22.95%. Now, our cardinal health trade, we get, if I do get it filled, it'll be 230, right? So let's calculate that as well. It will be 230 divided by, coincidentally, the strike is the same, 57.50. So this pays 4%. Now, simply put, that means that it pays 26% per annum, right? So you see, that's how I aim for my trades, right? And as long as they meet this criteria, right, I just go ahead if I'm willing to allocate, right? As long as I'm willing to allocate, I have funds to allocate, that's how I do it, right? On an annualized rate, the trade pays more than 20%, it's a go ahead. Yeah, it's a go ahead. Yeah. Right, that's it. Standard protocol, I'll take 3 questions. If any of you do have questions you want to post up, right? 3 questions I can take, right, for the next 5 minutes. Okay, I'll spare 5 minutes, all right? I'll take 3 questions if they do come through, right? So please start sending them out, start typing them in the chat box. Okay, if you like the trades today, you like my sharing on Tesla, please help me click the like buttons as well, because I do somehow understand that it does help with the algorithms of Facebook and how it appears on feeds of people serving Facebooks. Yeah, all right, please help me click the like buttons. All right, I'll appreciate it really, really much. All right, don't tell nothing. Like I said, all right, whatever trades I have open over here, I'm doing nothing, right? Because anyway, all right, I would be willing to buy the stock at $30, all right, on the option expiry, right? So right now, it's not working out. I don't even need to look at it. Yeah, okay. Alyssa, good question. All right, Alyssa, this is a good question to be asking. So based on what we have done, right? In fact, you'll be surprised to know after 52 trades we have executed, right? I've only been assigned on 2 stocks. This is the first one, right? The first one happened in December, right? That was on Consolidated Edison, right? We got the stock, right? And then I sold 1 call option on it. And after that, right, we got out. That's it, right? We got out. Okay, and we turned it profitable. We made money. Yeah, okay, and then the next one was Nokia. Nokia took a bit longer, but it was a very cheap stock. 300 shares at $5 was only 1,005, right? So it took longer, but we got out at a profit as well. Yeah, okay, so I did this in my last week session with participants, right? And yes, this was a profitable trade as well. Yep. This is wrong. This is not 485. Yes, I sold the share. Yes, this is right. Yep. Okay, so both, we only had 2 assignments and both of them turned out profitable. Yeah, okay, now, so the key is this. The key is when you're selling options, okay, when you're selling options, yeah, fail. Yes, so they failed. Two failed, right? But I still turn it profitable, so that's not a problem over here. Right, so we take the stock and then we turn it into a profitable outcome. The key over here is a lot of option sellers, they are fearful of the risk, right? The risk comes from the stock, right? So a lot of people go out there, they start selling options and they're not aware of the stocks that they're trading, right? Now, options are called a derivative. They're derived off the stock, right? So no matter how you trade options, you should still put stocks as your first perspective, right? Make sure you're happy with the stock you're trading on. Okay, then only structure an option strategy to maximize your returns out of that stock. Yeah, okay, so that's how you should be trading, right? If you're a seasoned option seller, right? Do not just go out there, choose an option trade. Oh, this profit is good, I'll do it. No, right? It's always the other way around, right? Analyze the stock first, right? Spot your opportunities, then plan the option trade around it. Yeah. Okay, welcome, Alyssa. Welcome. Right, Hernando. All right, so I said this over here. I will not be touching AT&T. All right, you heard me mentioning it just now, and also I'll be covering in much more detail in our members live trading webinar next Monday. Yeah, all right, Hernando. I promise you, I didn't forget. Don't worry. This one. All right. So from the course last weekend. All right. So I am supposing you are probably one of our fast track mentorship participants. All right, so how is it different from this mentorship program? It is one of them. All right, it is one of our mentorships that are available. Right, the only other one that we have over here is the membership. Yeah, all right. So apart from our live mentorship programs, right, the only other thing we offer, right, is an ongoing live trading membership with me and my senior trading partner. Right, so this is where we trade with our members twice every single week. One's by me, one's by my partner over here. Right, so both of us take a team of members, right, and we show them all the live trades that we execute on a week-to-week basis. Yeah, okay, so these are only two that you have available. Yeah. Oops. All right, Alyssa, welcome. Next, Isaac. All right, so Isaac's question, Isaac, if stocks are profitable, can consider selling it at a profit? Yes, yes, it is. Right, yes. Right, because let me highlight this case. All right, let me highlight this case. I had a student, right, who sent me a question who just sent me a question this week, right, because, right, he had the stock, right, he had this stock, Foot Locker, right, Foot Locker. He had this stock, I think somewhere around $30 over, right, $30 over. So he's been holding it all the way to 66. That's a double, everyone. That's a double, right? And my question is this, right? He was asking me, Terence, which call option should I sell? I said, why are you not getting the hell out? Why are you not considering taking your profit? Why? Because first, Foot Locker, right? Do you think it's going to be, a really exciting company moving forward, right? It's at 19 PE, that's fair enough, right? But, the dividends are measly. It's like 1.3%. Yeah, okay. And then second, do you see them having a lot of competition, right? From JD Sports, right? And then from Nike selling their own shoes, from Adidas selling their own shoes, right? And Puma selling their own shoes with their own boutiques, right? So I don't see a front, right, with a company like that. Yeah, okay, now, so that's a problem, right? So that's a problem right now. So he had a double, and he's just still trying to eke out some cash flow. Take your profits and go. All right, take your profits and go. Yeah, okay. All right, yes, Alyssa, all right, put options are not a strategy where you just go out there and sell blindly, right? When they work, right, of course, they look very pretty, right? But a lot of people out there just do not tell you what are the things you need to look out for, right? But if you do like the strategy, you do like the idea of option selling, right, really consider coming to one of our mentorships or join us as a trading member, right? And you can see how we adopt our strategies week after week, right? And learn all the strategies we apply. Yeah, okay, so do really send send an email to my team, right? So they can get you to the best suited mentorship for you. Yeah, okay, all right, send an email, yeah? All right, Gerald. Okay, so let me answer Gerald's as my last question before I end, yeah? Gerald, did you see me look at any volatility? All right, so I always tell my students this: if I don't do anything on screen, on air, means I don't look at them, right? And for a very simple reason, I had my fundamentals in place, right? Do you see how I justify my trade when I took Verizon today, right? With all those justification, right? Even if I get a high volatility, it just means I was given a bonus. That's all, right? It doesn't stop me from getting my cash flow. Yeah, okay. Trading it at a higher volatility just means that I would have gotten a higher payout. That's all. Okay, but my judgment doesn't stand on that. Right? I take it more like a bonus. Right? So I don't waste my time trying to analyze things that I'm not in control of. Right? My portfolio is simple: a basket of great stocks, right? Generating cash flow, trying to hit 20% per annum. Right? Especially with what I'm doing with all of you now. Yeah, okay. So you don't have to look through too much details. If you have joined me every week on Friday, you realize that I didn't look at too much details. Yeah, all right. In fact, I'm placing those trades like very quickly on the screen over here. Yeah. Okay. Awesome. All right. Thank you very much, Alyssa. All right. I hope the team has attended to you. Yeah. Okay. All right. And I'll see you in July. Yeah. All right. I'll be looking forward to see you in July. All right. I'm sure Hernando will be there. Isaac, have you been paying attention, Isaac? All right, it was on screen. All right, this is the cash flow standing right now. All right, we just crossed 15,000. All right, if we base it on the trade today. Oh, CAH is filled, everyone. All right, CAH is filled. Thank you for telling me that, Nando. All right, everyone, CAH is filled. Okay, so just got it filled, 230, it's done. Okay, so let's record it down as well. So today we closed out 1, we got back in on 2. All right, let me copy this detail. All right, 53. Pre-option contract, 16th of July. So we do have quite a few trades expiring on 15th of July now. 2:30. Voila. 690 in cash flow. So today, just the 2 trades alone, I've generated an additional $1,200 in cash flow. Right? So that will bring my portfolio up. That will bring my portfolio's cash flow up to $15,800. So I would be at 15.8% ROI based on my cash flow. Yeah, all right, 15.8% ROI based on my portfolio capital. Sorry. Okay, so interesting. 17,250 a piece on both of the shares that I've taken out today. All right, everyone. So thank you very much for joining me again on this Friday. Okay, thank you very much. Andy, I've already closed the trade. Right, so I'm not getting any stocks assigned on Monday. Okay, Andy. All right, now thank you very much for joining me. And once again, this is Terence for Portfolio Building on Fridays. Join me next Friday if you like what you see. If you do like what you see as well, please click on the share button. Please click on the like buttons. I'm going to ask for it one more time before I close off. Thank you very much. Have a great weekend ahead, and I will see all of you on the same time, same channel next Friday. Okay. All right. Thank you very much, and good night, everyone. Bye bye.